So thank you so much for joining us for this video. My name is Christian McCormick. I'm the Senior Product Specialist for our International Equity Growth Strategy that we have partnered with Nationwide for, and I'm based here in the US. And the purpose of this video is to dig a little bit deeper into some of the differentiating factors of our investment process relative to some other strategies and asset managers that are out there. So as most of you are probably aware, our international equity growth strategy is one that focuses on companies that exhibit high quality and growth characteristics. But the way that we define these is probably a little bit unique and different relative to other managers. So we move beyond kind of typical growth measures of trying to figure out who's going to have the highest earnings per share growth over the next 1 to 2 years, maybe looking at momentum, maybe just looking at high beta stocks, all in an effort to produce an excess return above the market. And instead, we focus on much longer time periods. We really enter into any sort of analysis on a stock expecting to be able to hold that stock if it makes it into the portfolio for a period of at least 5 years, if not longer. And the aim is that we're trying to take advantage of the compounding power of earnings and also operational cash flow for that company above and beyond the market. And if over the long term, market fundamentals do, or I should say the stock price does represent market fundamentals as we would expect, then that compounding advantage is going to play into our hand, and that is where our excess returns are going to come from. And so what we call this is enduring growth. And enduring growth really has 3 components to it. It has the growth piece, it has the quality piece, and it also has a valuation piece. So for the growth piece, really what we're looking for is we're looking for some sort of unique engine of growth that that company has. It could be some sort of technological advantage in the form of disruption. It could be a significant cost advantage that just enables it to produce a lot of operational cash flow and very high margins very consistently, despite the market or economic environment. Or it could be something that's germane to that particular sector or industry, such as some sort of demographic advantage. But whatever it is a long-term driver of, again, the earnings growth and the cash flow growth of that company. Now, the quality piece, that's a little bit more qualitative than what you would see. So traditionally, you see metrics such as return on equity, maybe return on invested capital, profitability, and we certainly do look at those metrics as part of our analysis. But for us, quality is much more of what we call a protection around that source of growth. So another way to think of it is we're asking the question is what is the probability that this company is going to be able to realize this high level of compounding growth rate that we expect it to have? In other words, how well protected is this source of growth? And so when we ask that question, what's going to increase the probability or make a stock more attractive to us are things such as management quality, the strength of the balance sheet, patents, and any other qualitative like advantage that will work in its favor. But again, we're asking that question, and I'll reiterate it again because it's an important one. How protective is the company around this source of growth so that we have a higher probability that it will actually be realized? And then of course there's the valuation piece of it. And this is nothing new for Allianz, but what you find is that over the long term, a stock price should ultimately reflect the fundamentals of the company, and we do expect that over these very long holding periods. But over the short term, markets do tend to be driven a lot more by noise, even individual stocks do. So we want to take advantage of this. So we're going to add and subtract to positions as stock prices and valuations move up or down, but it also acts as a protection, right? You need to kind of have that double check that says, look, even if we really believe in this growth story, even if we believe this is a very high quality company, again, there's a high probability that it's going to realize these growth rates, it is still possible to overpay for that. So we want to make sure we pay attention to what the market is valuing these stocks at, to make sure that we have as much upside priced into it as we possibly can. Okay? So our entire team here is really based around that premise. So you have an entire team that consists of portfolio managers, and all of them run individual portfolios that have the same type of mindset, that are all focused on enduring growth. So that enables these PMs to ask each other the right questions when new stock ideas come in, or when we're looking for new areas of interest and stock idea generation. And then in addition to that, at Allianz, what we've done is we've surrounded this equity platform that the International Equity Growth Strategy is part of with other additional sources of information. So we have a fundamental analyst platform that has sector responsibilities. This is a platform that doesn't manage any assets on its own and really is more effective to think of it as a sell-side analyst, an internal sell-side analyst team that we have at Allianz. We also have a very robust ESG operation. And our ESG operation isn't really the traditional sustainable and responsible investment type portfolio. We do have those portfolios, But the primary goal of our ESG team is to do risk mitigation analysis on these stocks. In other words, if you incorporate ESG factors into the broader picture of how you look at a stock, it should give you a much more holistic view of how that stock is going to behave, especially on the quality piece of that enduring growth factor that we're looking for, right? It helps us understand corporate governance structures much better. It helps us understand subjects such as cybersecurity, data theft, employee treatment, and other very important factors to the long-term protection of that source of growth. And then we also have another source that we call Grassroots. Grassroots is in essence just an internal expert network that we have in which a portfolio manager or analyst, if they're looking for additional information on a particular company or a sector, can engage this team, and this team will then turn to external resources that we have, primarily in the form of investigative journalists, to answer a series of questions that the PM or the analyst actually put together. And it can be a very helpful tool for vetting what a executive team is telling us, say about the sales prospect or of a company or potential legislation or regulation coming down. It just, again, more on the quality side than the growth or the valuation side, just really helps us to get an idea and gives us a better answer to that question of what is the probability that this company is going to realize that growth potential that we see in it, and how well protected is that. So hopefully this helps you understand a little bit better what we're doing on the international equity growth side in terms of an investment process and some points of differentiation. And look forward to working with you in the future.